Rahul Sharma, Director and Head Technical as well as Derivatives at JM Financial Services, joins us on the show. Hi Rahul, good to have you on the show. Well, rollovers are relatively higher this time around, and I think you've done some analysis on that. We have the FIs at a net short, and the hope is we see a reversal. Do you think we're due for one?
Yeah, very good morning, Nigel. So, in the last 2 years, 2 to 3 years, it has happened that every time Nifty has seen a very higher roller of, say, 84%, 83, 84%, the subsequent series has been one where reversals have taken place. Now, this happened the most recently in the expiry of March. So, we saw March where there was volatility. Initially, the month began on a bumpy note. And then we saw a very big rally of around 1,500, 1,600 points happening in the month, in the series of March. Now, this time around as well, at least as far as the first three trading sessions are concerned, post the previous month's expiry that we have seen, Nifty has sustained the crucial support level of 24,300. Now, there is a very high possibility that this series, which means the September series, could be the month where we see a proper reversal of sorts, at least in the short to medium term. Now, what that translates is we have a very aggressive, bearish ratio, long short ratio by FIs. We had a market breadth which was dwindling by the day, and essentially a market which is oversold on most of the parameters that we've seen. So, any trigger, whether it could be fundamental coming from the US or it could be something that probably forces FIs to cut their shorts, that would mean a significant rally can happen from these levels. So there are two cases possible. Either Nifty reverses from here itself. We've sort of, last 3 days somehow sustained 24,300, not broken that. Or alternatively, in case we do breach 24,300 on the downside, then 24,000 is the so-called base for the current series, which means buy on dip is something that we advise to our clients. And essentially, from a sentiment perspective as well, we feel that the markets have hit a recent low, and the risk reward especially is favorable for a short covering rally from here. So September, we are putting our mouth where essentially we are calling that this could be a month where we could see a proper reversal of sorts.
Rahul, so you're saying just in terms of direction of travel in the near to medium term, more up than down? That's your thinking?
Yes, absolutely. In fact, today's session, it is indicating that, we might very much test the 20-day exponential moving average, which is around the 24,800 area. So in the very short term, anything about 24,800 closing above that should bring in some positive momentum on the markets. And alternatively, even if we slightly zoom out a bit, I think 24,300, 24,000 is the area where you should be looking to buy the dip in case that happens. So, this is the time to cherry pick your stocks, probably start getting into setups which are relatively doing well, and be more long than short in this kind of a market.
Rahul, in terms of specific trades, what would you recommend in terms of positional trades from here?
Yeah, so two stocks are looking very good on this, medium-term charts. One is Dixon Tech. Yesterday, we saw a very strong volume-based activity in the same, a big cup and handle formation on the last 3 to 4 months is the pattern where this has been formed. We feel that the stock is, set to hit targets of around 18,500 to even possibly 19,000 on the upside. So this could be one stock which can do very well from these levels. Apart from that, there is a reversal of sorts on the two-wheeler auto space, especially in Bajaj Auto. Now, Bajaj Auto has been the only stock which is underperformed this auto space in a very big way. Now, yesterday's session, we saw a breakout happening above the 8,800 mark. And positionally, we feel that the stock has got long legs all the way up to 9,800 to 10,000 on the upside. So this is one stock that can be considered for a catch-up rally to be had in the auto space. And lastly, on the banking pack, RBL Bank is something that we like at these levels. The stock has defied gravity, stayed above its 20-day EMA. The stock is actually forming a bullish Poland flag pattern on the daily charts. And this is, in an environment where essentially Bank Nifty has taken a beating over the last few weeks. So positionally, we feel 300 is very much on the cards for RBL Bank. One can look to buy at these levels. Maybe have a stop loss placed at 255 to 60 range, or look at bull spread in the same. So these are the top three stocks which we like on the long side, and they have a very good setup in terms of the medium term charts.
Dixon, RBL Bank, and Exide. Right, Rahul?
Absolutely, Nigel.
All right, Rahul, good to hear your thoughts and going against the trend, expecting a good September. Hopefully by the time we end September, the Bears will be singing "Wake Me Up" only when September ends. Thanks a lot for joining in, Rahul, and giving us that view. For the time